There we go. So I'll let people in 60 seconds or so. And then, yeah, Phil, I'm going to stick you on mute, but if you've got any points, just drop them in the chat box.
Sure, no problems.
Yeah, we've got a few in the waiting room already. So they're just starting to arrive, so I might just give them just another minute.
Sure.
Usually it takes 30 seconds as well to make sure everybody's got their cameras off and
Yeah.
microphones and all the rest of it. Right, okay, I'll open up the call. Just let everybody in. I think everybody's on mute, which is good. Okay, just letting everybody into the call. Welcome everybody. Okay, no doubt we'll get a few late joiners as well, but we'll let people in as they join. So let's just make sure we've got everybody right. Yeah, there we go. Right, good day everyone. Thank you for joining us live. We're recording today as well, so we'll send you a copy of the video when we've finished. So I'm Pete Wargent from Buyers. I'm delighted to be joined by Rich Harvey from Property Buyer as the co-host today on today's webinar. Welcome, Rich.
Great to be with you, Peter. Happy to share some thoughts with you, and I really appreciate the invitation.
Yeah, it's good to see. We last caught up, I think, in Melbourne, but this year everything seems to be on Zoom and Zencaster. We were just saying before I jumped on, I don't think I've even been to Sydney since about February. So
that's right. Yeah, it was actually 12 months ago that we had the REBA conference down there where you presented, and that was my handing over the reins as ex-president of the Buyers Agent Association. So that's amazing how what's happened in 12 months, eh? Mm.
Yeah. Oh, you've done the introduction for me then. So I'll give you a brief intro, but then you can tell us a little bit about Property Buyer and how you started in buyers agency and so on. We won't spend too long on that though, so we can get into the latest trends and news, what's happening in Sydney. So as Rich mentioned, he was previously the president of REBA, the Real Estate Buyers Agency Association. He was the national president. I was actually just thinking back the other day, we started up as a buyers agency in London, but when I started in Sydney in 2011, back in those days, there weren't really that many buyers agents around, certainly compared to today. But even back at that stage, Rich was one of the most prominent and most experienced buyers agents in Sydney and New South Wales. So, Rich, tell us a little bit about Property Buyer and also just how you came to get into buyers agency originally, and then we'll come on and look at what's happening in the market.
Sure, Peter. Well, look, I started my company, Property Buyer, back in 2001. So this is our 19th year of operation. About time I took long service leave, I think. I have to talk to the boss about that. No, I really, the reason I got into it, I saw there was a real niche in the market to just represent buyers. You know, agents have always, selling agents always represented the seller, but no one was really representing the buyer the right way. And also a little side story, my brother got stung by one of those two-tier marketing groups, you know, the spruikers that fly you up to Queensland and say, hey, you got to sign this property contract by Monday or it's going to be gone. And he ended up buying a property that was overpriced and it didn't perform and all the rest of it. So didn't ask his brother for advice, unfortunately, but I wish he had. So again, that really, you know, it's galvanized in me that people need to get true and independent advice when they're buying properties. So, like I said, I started almost 20 years ago. We've won over 34 awards for excellence in our services so far. As well as being president of REBA, I've also been the chairman of the Buyers Agent chapter for the Real Estate Institute of New South Wales. So I've served on their board, helping to raise standards and the profile of buyers agents there as well. I'm also a member of PIPA, the Property Investment Professionals Association, and I'm a qualified property investment advisor. So my team, I've got a company of 10 people, and we cover the entire Sydney Basin, all over Sydney, all pockets of Sydney, as well as Wollongong, Central Coast, Newcastle, and some other regional areas as well. And like you, Pete, we've got a network of buyers agents around the country that we work with as well. So yeah, but I guess what really motivated me to get into it is I just really enjoy helping people achieve their dreams, Pete. For me, it's the greatest satisfaction I have in my job is seeing the smile on a face of a client when they've bought their home or bought an investment property, and just knowing that they're well on their path to achieving their goals. That brings me a lot of satisfaction.
Yeah, it sounds like a similar journey to myself. Yeah, so well, I think you've pretty much covered what I was going to ask you there in terms of where you buy and where your team covers and so on. I think you made a really important point there in terms of the level of experience, and we've always thought along similar lines. The barriers to entry in real estate are not always as high as they might be, and that's why whenever I've worked with buyers agents in the past, the first thing I check is how long they've been operating for, because particularly I think since 2012 and the Sydney property boom, a lot of people became buyers agencies or one-man band buyers agents overnight, and there wasn't necessarily the quality there that there once had been. So I think first and foremost, if you're thinking of working with any buyer's agent, is to check their level of experience, make sure they're fully appropriately qualified, professional indemnity and all the rest of it, which is actually what Rich has been working with the guys at Reba to do, really. It's just to set a standard for the industry in general. So I guess the topic today, Rich, then, which will probably run for about 40 minutes or 45 minutes, I just want to get some thoughts from you, having barely been to New South Wales this year, let alone bought many properties. I just wanted to get some insights from you in terms of what's happening on the ground, what's happened to transaction numbers this year, presumably a big drop in April and May, but from what we can tell, something of a rebound now happening in terms of volumes and activity. But also, we'll probably go a bit more granular and just have a look at which areas are people buying and the tree change phenomenon or all of that stuff. So was that your experience this year? Things kind of ground to a halt as people worked out what was happening?
Well, obviously, we came back from holidays in the middle of January, looking forward to a pretty active year. Obviously, 2019, we had both the federal and a state election here in New South Wales, and the federal election, and that really put the brakes on everything. And then negative gearing was being talked about, taking off the table, and then we found that the market really recovered. Probably June, July, it really started to accelerate, and then. We came back from holidays, I said, beginning of this year, thinking, wow, we're going to have an amazing year. It looks like the market's really going to build up ahead of steam. And then COVID hit about the middle of March. And it was fascinating to see the reaction of buyers and sellers when that news of a pandemic hit. We had a number of our clients, unfortunately, just put their brief on hold. And they're still on hold to this day because they're worried about the market. But those that actually stayed the course and said, you know what, despite COVID, we're going to keep on buying. We see this as an opportunity. Each of those buyers, I can tell you now, some great case studies. We got them some significant discounts. So it was interesting, Pete, to see how people react to market conditions and to fear. So yeah, when I guess in that late March, early April period, that was the period of what I call peak panic, and that was a time to actually buy really well. I mean, I got just locally here at Killarney Heights, I bought a property $200,000 under what it was worth. Did another one in Pennant Hills for about 150k under, one in Manly for 100k under. So even in some of the prime suburbs, I was getting some incredibly good discounts. But obviously what happened from a more generic point of view, the market just really went into lockdown. So that obviously listings, just like it's happening in Melbourne now, listings are really low. People just couldn't transact or didn't want to transact. So the volumes of listings dropped, the volume of transactions dropped. Didn't mean that buyers weren't wanting to buy and sellers weren't wanting to sell. It was just more difficult for them to actually perform or transact in that market. So it was a real challenge, obviously, for a couple of months there. And then as we came through the July period, everyone was, the economists were forecasting doom and gloom and saying, You see the headlines: Reserve Bank, Commonwealth Bank, 30% drop potentially in the market, and that was their worst case scenario, not their most likely case scenario that gets reported. So always check your headlines, guys, when you're reading the newspapers. And obviously those bearish forecasts have not come to fruition. We've seen a 2.1% drop in the Sydney market in the last 3 months. In Melbourne, we've seen just over a 3.5% drop. But it's nowhere near the 10 and 20 and 30% drops that we expected. So I guess the general message is, Pete, is that the market has been incredibly resilient in the cities. Melbourne's a bit of a difficult basket case at the moment because it's just in lockdown, but it will resume its normal trajectory once it comes out. And we'll talk about some of the other trends, but volumes have been down and the buyers are still there waiting in the wings.
Yeah, I suppose, there's a whole heap of different things going on. Just while I remember, folks, if you've got any questions for Rich or myself, you can just drop them into the chat box. So we can either answer those as we go through or we can pick them up towards the end. I think, we saw in Brisbane, we actually had a number of people pre-approved to buy around February, March time, just as things were starting to become less clear. And we had a number of people, even though they were pre-approved, they just said, look, I'm going to hang on for 6 months and just wait and see how things play out, particularly for investors rather than home buyers. Just that uncertainty, because it's a fairly unprecedented situation. And just like yourself, I had some grand plans this year, Rich. I actually had a New Year's resolution to learn Italian and then go to Italy for a month, and of course, of all the places on the planet, that was like the worst possible place I could have chosen. But I think Brisbane and Queensland was very similar. Really, there was a huge drop in listings, so there was very little stock. Prices came off maybe 1% or something, but really there was no real discernible impact on price. It was just volumes really dropped very sharply through April and May. But now things picking up again, and open homes on the weekend absolutely packed out by all accounts. I was reading a report by Riskwise Property Research. They do a quarterly risks and opportunities report, and they made a very valid point, and that's, if you look historically in Australia, there's not really any correlation between unemployment and housing prices, much more driven by the price of money. And as they said, there'll be a lot of disruption this year, especially in Melbourne, simply because people can't transact. But as soon as things open up again, it'll be like a dam bursting, because all of those people who wanted to buy a home this year will come into the market. There's no stock on the market, very low.
Exactly.
And the old correlation between the price of money and rising prices will reassert itself as we move into the new year. So I would imagine Sydney very similar. I was just going to say, Pete, just to jump in there, I'll just share my screen if I can. I'll just show you a quick slide, just what's happening with auction clearance rates, just to kind of demonstrate, if I can, just that area. So you can just see here, during 2019, obviously it was pretty low at the beginning, just before the federal election in May. It was sort of hovering around the low 60%. And as I said, around that July period, the auction clearance rates in Sydney really trended up between high 70s, even nudging 80%. And then it was obviously hitting 80% in February and March this year. And then look at the drop off there in March, massive drop off right through April. But then look at May. May's come back again to the early 60%. So we've been hovering between 60 and 70% clearance rates. And the volume numbers have been somewhere between about 500 to 800 auctions per weekend. So in Sydney last weekend, we had a clearance rate of about 66%, 541 auctions. That just goes to show you, see that, just that, consumer sentiment has a big driver on how people feel at bidding at auction on a weekend. So yeah, an interesting phenomenon there, Pete. Yeah, so I've got they say a picture tells 1,000 stories. That really does it in that instance. So we've got a question in the chat box there, Rich, but actually, I guess it relates to a point I was about to make, and that is, I guess this year we had a completely unprecedented situation where a lot of the foreign students or international students either couldn't or wouldn't come back into the country in Q1 of the year. And plus, tourism kind of just essentially stopped around about the time that you mentioned there in the first quarter of the year. And rental vacancies in the apartment market, especially it seems in the CBD itself, went really high. But it seems to me, I was following the numbers from SQM, and rental vacancies have been falling now since May. So for a number of months, and vacancy rates overall are lower than they were a year ago. So I assume what's happening there is, well, there's 4,000 people a week coming back from overseas, as we know, but also I think what's less appreciated is, yes, Australia has a lot of Chinese tourism and tourism from other parts of the world, but actually Australia being a wealthy nation post-mining boom, we actually have more people leave these shores than arrive on a short-term basis normally. And of course, this year we've all had to holiday at home or not holiday at all. And I assume that's what's accounted for falling vacancies. I suppose I guess where this ties into the question that Simon's just entered there. So his question is, would you look at a 2 or 3 bedroom unit on the North Shore of Sydney, so from Artarmon to Gordon, or would you look at maybe an entry level home in a suburban area like Castle Hill or Cherrybrook with a budget of around 1? So I guess it to a certain degree ties into that point. Is the unit market weaker? Is that just in the CBD, or is it broader than that? And what kind of trends are you seeing there?
Yeah, I guess to answer that question is always, it depends. It depends whether Simon's a home buyer or an investor, and it depends what his long-term goals are. I can't make that recommendation unless I know his background. Just like a financial planner can't give advice, but I can make some general comments though. I think looking between Artarmon and Gordon, there's quite a lot of new stock coming online. All along the highway, there's been rezonings from R2 to R4. That's a high density living along Pacific Highway. So there is quite a bit of new stock, both in production and planned in those areas. But if it's my money, I'm usually going to put my money into land because I believe it has a higher capital growth or capital appreciation rate than an apartment. Also out of Cherrybrook, Castle Hill, I used to live out that way at Pennant Hills. There's some great schools, some really attractive lifestyle parks and sporting facilities out there. I mean, 1 million doesn't buy you a lot these days, but it still will get you I think a better quality of long-term proposition if you're sort of aiming to build your wealth at a faster rate there. But again, if it depends. You might want to be commuting to the city, and you might need to live on the train line between Artarmon and Gordon. So, but I guess, Peter, they're just my general comments.
Yeah, okay. Well, I think as you're on a bit of a roll there, related question from Michael. Inner East in Sydney seems undervalued, particularly for rentals at the lower end. Do you see this trend continuing into early 2021? I guess it's not unrelated, I think, to the point on tourism, international students and so on. What you find is that a lot of that rental stock tends to be quite small apartments. That's not really very suitable for anybody with a family or even often young professionals. So at the lower end, it's often student rentals, Airbnbs, short stay lets, that kind of thing, especially around sort of places like Darlinghurst, the Cross, that kind of area. So I suppose there's very clearly behind the scenes an awful lot of lobbying happening to get international students back into Australia. There's actually a pilot scheme underway this month to begin bringing back international students via quarantine in South Australia. My gut feel is that the higher education sector as a whole will be lobbying the government extremely hard to allow international students to come back in very soon. It may be January before that can happen in earnest, but certainly by the next full term. And when you do see that, the rental vacancy issue will quickly subside. Generally, I think as well, my experience is when you do get falling rents like we have seen in the Sydney CBD and some of those apartments, they tend to fill up. People just take advantage of the cheaper rents and things just normalise that way. But any thoughts, Rich, on rentals at the lower end of the market?
Yeah, as you pointed out in your commentary there, Peter, I think a lot of Airbnb properties have gone back into the long-term rental pool. So that's been a bit of a supply issue, which has diluted price and demand. So, but that, as you say, is washing through the system. We're starting now to see vacancy rates coming down. So I think Michael's question, inner east. Well, inner east is always a really great spot to buy. Long-term, fantastic capital growth for both houses and apartments. And again, everybody loves the lifestyle of the east, you know. So I think in terms of a trend, I think, you know, if you can buy in the next sort of 3 to 6 months in those markets where there is a little bit of a downturn, you'll do quite well long term. One thing I've been saying to some investors that are worried about the vacancy and potentially lower rents is, look, you just adjust your rent for $50 a week for a short period of time, and then it will, you know, come back and normalise itself over time. So don't stress. It's not a long-term proposition, but if you can, you know, take that $50 a week less now, get it for a far cheaper price, you'll more than make up the difference in the longer term.
Yeah, I think the other thing is, Rich, from a cash flow point of view, I mean, we've seen 5 interest rate cuts, you know, in the space of 12 months. So home buyers can borrow from 2% now, but even investors and even on interest-only mortgages, we're seeing rates around 3%. So even if you do have a lower rent for a period of time, the lower mortgage rates have more than compensated, to the extent that in a number of areas now it's actually cheaper to be a buyer than a renter from a cash flow point of view, which, you know, if you think back to Sydney in 2006 and 2007, when I was living around Bondi Junction, I mean, it was excruciating in those days. You had 9% mortgage rates and so on, but that's you know, that's really turned on its head now with the way mortgage rates have gone.
That's right. Yeah, yeah. I think it's interesting because, like, I remember a period of time in the last maybe 10 years when there was almost like a really strong demand, almost like rental auctions in the east. You know, there was a time where the vacancy rates were so low, it was so competitive to get in. Obviously, we don't have that today, but yeah, it's a good long-term demand market.
Yeah, actually, I can remember. I'm struggling to remember the year, but I can remember quite clearly in Sydney going to business lunches when people were really in genuine shock about rents leaping by 20-25% in the east. Landlords just, you know, writing to tenants and saying, "I'm sorry, the rent's going up," and there was just a massive rental shortage for a period of time, which took some time to be addressed. And clearly, we've been through a large construction boom in some of those areas like Parramatta and Rouse Hill and Blacktown and so on since then. But there was a period there where the rental stock was very low. It tends to come and go cyclically, I think, with a number of investors in the market. So one of the questions I wanted to ask, Rich, is about this the sort of tree change or coastal change phenomenon. We've seen it up in Noosa. Some of the hinterland markets are absolutely flying. And I think from a short-term perspective, that is quite rational. People want space. I can well understand people in Melbourne heading to the peninsula or other areas just simply for more freedom and so on. I guess what my question is, well, firstly, how much are you seeing that in areas like the Central Coast? And secondly, do you think we'll see some of this being a permanent phenomenon, or is some of it going to be temporary? Because I think the working from home concept has been around for many years, but has this year just accelerated that trend? And do you think any of it will stick beyond this year?
Excellent questions, Pete. I'm pleased you asked them. So to answer your question, the tree change and sea change phenomenon is absolutely happening as we speak. Absolutely. And I think COVID has accelerated the dreams of a lot of people. I think people have had a dream of, you know what, I'm going to move to the Blue Mountains, or I'm going to move to the Central Coast, or the upper northern beaches, or Wollongong, or the South Coast, whatever sort of, or the Southern Highlands. They're all kind of areas that have got their own unique characteristics and desirability. And absolutely, we're seeing that trend very much taking place. And we're actually assisting a lot of clients in achieving those kind of dreams. Is it going to be a permanent thing? I think it'll be semi-permanent. I think it's, you know, now that we've got the ability to both work from home and an office, I don't think we're going to be working from home forever. I think people will have the ability to do both, because I think we need to collaborate. We need to come together in a physical form, obviously, to get the best of both worlds. I think Zoom's great like this. but it doesn't beat, natural face-to-face interactions. There's a lot of unspoken communication that happens in a room when you're collaborating with colleagues and really got the ideas sparking off each other. So I think long-term, Pete, the tree change and sea change things is happening. I mean, I've got family members that have moved up to Newcastle and the Blue Mountains. I know a lot of people. Yeah, Newcastle's a classic example. We've got actually a lot of clients that are moving up there for both work and lifestyle reasons, and they love it. They just go, oh, we left the congestion and the headache and peak hour of Sydney, and we're really enjoying the change. So we're very much seeing that trend will continue. And there's quite a few other trends I'm happy to share as well, Pete, if you'd like me to talk about some of the other trends.
Yeah, far away, please do.
I guess there's probably almost like 8 or 9 trends that we've been seeing, happening this year with COVID. One is that it's the return of the first home buyer. COVID has helped to bring back affordability a little bit more. It's not completely cheap to buy again, but it's certainly put a dampener on prices, not dramatically, but it's sort of making it now first home buyers coming out of the woodwork. But primarily it's the low interest rates and the cost of money and also the first home buyer incentives that's driving that end of the market. So first home buyers are really active is a definite trend. We've talked about the affordability and the exit to lifestyle. That's the second one I talk about. Also, the third trend I talk about is just the resilience of the cities and the resilience of property prices generally. It's, a lot of people think as soon as a crisis hits, property prices are going to plummet. There's going to be blood on the streets. We're going to fall off a fiscal cliff in September or next March now. And I'll talk about why I don't believe that will happen. One of the economists, Pete, you probably follow him too, Christopher Joy, who writes for the Fin Review. He just wrote a great article. I can't pull it out, but it's this one. It was on the weekend, and it says house price bears turn bullish as markets start to recover. But I'll just read you, I guess, the highlight or the central thesis, if you like, of what he's saying. He's basically saying that Commonwealth Bank and a lot of the bank economists are now revising their really negative expectations and forecasts. They're revising them to be a more moderate drop in property prices. And he says, our more modest position expressed in March 2020 was that national dwelling values would only decline by between 0 to 5% over a 6-month period, following which the market would rebound robustly with capital gains of 10 to 20% over the next 1 to 3 years. So basically, there's one sort of economist who's saying, hey, we're going to have a 5% drop, and then you watch the buyers come back, and they'll come back with a vengeance. And I write that in a lot of my blogs too, Pete. I talk about latent demand. There's a lot of stimulus money sitting around. There's a lot of people who actually are doing okay. There's a lot of people doing it really tough too, but the ones that have got money or got equity, they're going to come back and start to buy pretty aggressively. The other trend we're seeing, we've already talked about, is low vacancies, particularly in regional areas. Because people can now telecommute, work from home, we're seeing a lot of the regional areas, the vacancy rates just drop dramatically. And also the demand for buyers in those areas, you talk Geelong, Central Coast, Newcastle, you talked about the Sunshine Coast, all those peripheral regional areas have really got strong demand growing. I guess the fifth trend is upgraders. I think of that movie Robots, they talk about upgrades, right? Upgrades. Everybody's looking to feather their nest, right? Everybody's looking to go, oh, you know what? This working from home thing, it's not working for me because I don't have a big enough space. I don't have a home office. So we're seeing a lot of our clients wanting to upgrade where they live and have that either separate granny flat or a separate part of the home, away from the noisy kids where they can actually have a conversation without being interrupted. And they're realizing they're going to have to move home to achieve that. So we're seeing a lot of that transition happening now with people moving into better quality and larger homes. Another trend, Pete, is the expats, the good old expats. There was obviously a brain drain. Now we've got the brains coming back home where they feel safe. And we're finding that a couple of expats are buying sight unseen. We actually just bought a property last week for a client from Hong Kong and did extra photos and videos, and we bought him a $2.5 million home. And he's super happy. We got him a great price as well. So we're seeing the expats wanting to get their bolt hole back home because they just can't get back in time and they don't want to miss this opportunity in the market. So that's another one. I think we'll talk about migration too, Pete. Migration's a big one, and it's temporarily halted while our borders are closed. And migration numbers are probably going to drop to about 30,000 this year, down from whatever 190 or the year before. So that's going to have a dramatic impact on the market temporarily. So it means obviously the Airbnb have dried up. A lot of the Chinese student accommodation and other types of student accommodation is out the window. But just remember, it's a temporary impact. I think it'll take quite a while for migration numbers to get back up to that 160 to 200k migrants a year, because the government will want to create jobs locally before they have the skilled migration program. But we're still going to need migrants coming in, both long-term and temporary migrants. You know, there's talk of shortage of fruit pickers and other types of industries at the moment. So that migration thing, just watch that carefully, and that we'll see how that plays out.
I would say on that point, Rich,
yeah.
don't underestimate the power of vested interest. I saw the Department of Home Affairs knock out a report last week very quietly and under the radar, and I see the number of student visas on issue is now at a record high. And you think, well, how could that possibly be the case given the drop in issuance to Chinese students? Well, the answer is they've been issuing student visas like they're going out of fashion to people already in Australia, particularly with the drop-off in demand from Chinese students, students from India, Nepal, all over Asia. So student visa numbers are actually higher than they've ever been now, which it would seem quite counterintuitive. But I also noticed in their release, they said there is no cap on the number of student visas we can issue. So that says to me that as and when the borders open again, there'll be a big flood of people coming in. As you mentioned as well, it's simply the pent-up demand as much as anything else. People still want to come to Australia, still seem to be a clean and safe and desirable place to live.
Exactly.
So actually, well, finish off your trends, but I've got a couple more questions for you.
Sure, yeah. I'll just quickly, last two, just really quickly, is investors, property investors have been a bit gun shy. We've seen a lot of investors sort of pull back and think, oh gosh, you know, if the market's going to drop, I'm not going to buy, and if rents are dropping, I'm not going to buy. But those investors, as I said, who've been sort of willing to go counter-cyclical have done really well. We've been able to get some awesome discounts for our clients. We just bought one out in Western Sydney the other week. I bought a house for $525,000 with room for a granny flat, and then one literally sold across the road at auction 3 weeks later for $595,000. So, you know, you can pick up some what I call really good deals in this current market. And the last trend, Pete, I just mentioned is commercial property. Obviously, commercial valuations for city office properties has obviously tanked and taken a drop somewhere between 10 to maybe 30%. But what I'm also seeing, we're actually representing a couple of buyers in commercial buying locally in some of the suburban areas, and suburban commercial and retail is actually doing okay because people want a little office close to home, but not in their home. Or they want, like, you know, their practice, it might be an industrial shed or some sort of office space, not in the city anymore, but closer to where they work. So they might end up having still one big mega office in the city, have 3 or 4 little satellite offices, or they might just go for the serviced office approach and just use a serviced office. So we're seeing that trend holding up valuations for commercial properties in the regional hubs quite well.
Yeah, I must admit, all of the articles on the death of cities and so on, I remember hearing this about 30 years ago when I was at school, that there was going to be this new thing, the information superhighway, and nobody would go into London ever again and all the rest of it. And yet, if anything, with the arrival of the internet, people just moved closer together. And when they finally did build the new sort of employment hub in London, it wasn't out regional, it was right in the Docklands area, and it just re-intensified the cities. And I see in the last 2 weeks, we've had Amazon approved to build a $1 billion tower right in the heart of the CBD. Atlassian, another one, $1 billion tower right in the heart of the CBD. So I suspect that a lot of people are extrapolating some of these trends, which are probably temporary. But I think if you look 20, 30 years into the future, I think the cities will still be where the bulk of immigration still heads to, largely because we get a lot of migrants from Asia these days, and that's the way that many Asian migrants prefer to live. So a couple of questions for you, Rich, before we wrap up. One came on email, one on the chat box. So first question was just a general question, I guess, for a first home buyer. If they don't have the budget to buy an expensive house in Sydney, what are some of the alternatives that they might consider either in Sydney or in New South Wales? And the second question was more a logistical one. in terms of how, more specifically, if people engage buyers agency services, how do you and your team actually help people through the buying process, and how does that benefit them? So it's a two-pronged question.
Sure. So I guess with people that are looking for options, I mean, if this person who has inquired might have like $600,000 to invest, obviously they're not going to be buying in Rosedale or Vaucluse. But to get something that's in a good position, it might be that they look to buy an apartment a little bit closer into where they work, or it might be that they consider the Central Coast or Wollongong, like the Sydney Fringe. So again, we give to answer your question about how do people engage with us, well, obviously through your introduction, Peter, we do what's called an exploratory phone call. We have a strategy chat with them where we identify what their needs are, ask them a bunch of questions around their long-term goals, and then we identify particular regions and locations and suburbs that will fit their criteria and fit their budget. So we give independent information on median prices, likely growth rates, and the properties areas that will meet their brief. Then the next thing we do is start the search process. We'll find some both on and off market properties that meet the brief. We evaluate them, present them to the client, review them. If the client likes them, then we do an appraisal and tell the client exactly what it's worth based on a comparable sales analysis. And it's really important that anyone watching looks at information and make sure you do a decent comparable sales analysis. That's where you make your money when you buy. Then we step in and we negotiate on behalf of the client. So we will give the client a range in where we see good value, and we'll try to buy within that range, or if we can, even below that range. But remember, there's good competition out there. So we step in, negotiate it either through private treaty or bid at auction on their behalf. And we coordinate all of the other due diligence, the pest and building or the strata search that may need to be done, and any other requirements that needs to make sure that it's a safe buy. Then we liaise with your broker and your solicitor to get the contract reviewed and exchanged, and we facilitate that process. And I can tell you, Pete, a lot of people miss out on properties because they don't understand the process of buying properly, even just how they interact with agents and their discussion and dialogue with agents. So what we bring to the table is a very transparent process, very open and honest communication around what the property's worth. And also in your interactions with agents, people inherently distrust agents, but we know how to work with them. We don't get any fees from agents. We're completely independent of them, but we know how to interact and how to win a deal for our client based on our conversations and nuances in the way it works. So that's what we do. We aim to save our clients as much money as possible. How do they engage us? Well, they'll need to sign what's called a buyer's agency agreement that authorises us to act on their behalf, and they'll pay a fixed fee to do that process, Pete.
Okay, very quick question. Best value suburbs in Newcastle, any in particular? I haven't been down for it's probably, I don't think I've even been to Newcastle this year, let alone recently. So any
there's some great parts. And again, it depends on your budget. So if you've got, over $1 million, you can buy in Merewether, overlooking the beach, or you could look in Waratah or Jesmond or Cooks Hill, or, there's any number of good value suburbs. It just depends on what sort of budget they've got and what sort of lifestyle and or if they're an investor, what's going to drive their long-term growth. We've actually done a couple of what we call dual living style of properties in that area, where we'll find a block where we can add a granny flat to get a secondary income. But look, I've got a guy on the ground, Kevin Mason in my team, who's my expert. So he'd be the one to actually answer that question in a lot more detail based on where they're looking for.
Yeah, fantastic. Yes, and well, looks like around about a $1 million budget, they said in the chat box.
That's great.
Yeah, it's a super part of the world, actually. I used to, way back in the 1990s, used to go on sort of boys' weekend trips up to Newcastle, and the reputation back in those days was, the pool balls will stop rolling when you go into the pub, sort of. I did some work with PricewaterhouseCoopers up there. Obviously, Hunter Valley has been booming. There's some fabulous lifestyle place these days, and people are quite right.
It's all being gentrified too, Pete. So you've got new law courts, you've got a new university campus, you've got the light rail, the heavy rail. The light rail goes right into the centre of the city. So it's certainly not a ghost town. It's a really trendy. Actually, some of the you think of some of the inner city Brisbane pockets, maybe like New Farm, something like that. That's probably comparable to some of the areas like, some of those sort of inner Newcastle suburbs now. So it's a really attractive area.
Yeah, it's beautiful. And the thing people always, a bit like in places on the Central Coast as well, like your Minor Beach and places, once upon a time relatively cheap, but then people realised, well, it's still the same Pacific Ocean over to the east there, and why not get a bit more lifestyle? And as you said, everything on your doorstep these days. So I'll just, I think we won't keep everybody all day today, but we'll send you a video copy, and we'll put a post up on our Facebook page. It's Buyers is the Facebook page if you're not already following. I'll just give you a quick rundown of the 3 levels of service that we offer as well for every budget, and that's using the top buyers agents in the countries, like Rich and his team at Property Buyer. We only work with the most experienced buyers agents, as we said right back at the beginning. There's nothing more important in real estate than levels of experience. And as Rich mentioned, you don't know what you don't know. I think back to when I bought my first place in Bondi years ago, and I thought, chartered accountant, working in finance, I thought I should be across all of this stuff, but actually looking back at the process, I really had no idea what I was doing. I overpaid for the property. I was in an apartment. I didn't know how to check for special levies or the body corporate. Really, if only I'd had somebody to tap me on the shoulder and step me through the process, I would have saved their fee probably several times over the years. Not just in terms of the price, but also just the asset selection and so on. Another thing, cheaper strata fees would have been good, but I didn't know much about that as a first home buyer. So at Buyers, we offer 3 different levels of service. So we offer a full buyers agency service, as Rich mentioned, which is the full end-to-end service. So all the way through from the exploratory call at the beginning to work out strategy and what you need to buy and where, all the way through the search. That includes pre-market properties, off-market properties, all the way through negotiation, due diligence, comparable market analysis that Rich mentioned that is so important, through the acquisition, right the way through to the settlement, and for investment properties, even some guidance there on how to engage a property manager and find a tenant and so on. So that's the full level of service. There's also an auction bidding service if you're looking just to buy an auction and you've identified a property. And for people who've already worked out where they want to live and what they want to buy, and they're just looking for a negotiation service, we also offer just a service called We Buy, which is our basic or entry level service. So for people who are just looking for negotiation, acquisition and due diligence, but we've got a fabulous network of agents, and we only work with the best people like Rich Harvey, who's, as he said, right back at the beginning now, 19 years. You should be putting in for a gold watch at 20 years.
That's
Rich.
right. Yeah.
You'll have to ask the boss for a pay rise and a gold watch. So yeah, so that's it. So if you want to know more about us, buyers.com.au. You can see Rich on our panel there, and also Property Buyer. They have their own website that you can check out just by simply Googling. But that's going to be.
Pete, do you want me to give your viewers just 5 hot tips as well on some areas around Sydney?
Absolutely, yeah. And the more value you can add today, Rich, the better. So please fire away.
All right. I know you were going to ask me this question, so I thought say the best to last. Pete did ask me sort of where are the advice? What's the advice?
I didn't ask the question.
That's all right, mate. But where are the opportunities for buyers in Sydney, and how should buyers approach the market both the rest of this year and next year? So a couple of things. One I'd say is just take a long-term view. A lot of us, when we're in the middle of a crisis, it's hard to put your head up and get a perspective. So I just encourage you to take a long-term perspective and think back to, I don't have the chart to show you now, but it's on one of my other webinars, is if you look at how many times we've had a downturn versus how many times we've had an upturn. And after each downturn, we generally have a much stronger rebound because there's a lot of pent-up demand that comes through. So I think this COVID crisis will be no different. So there's going to be a headwind with unemployment, but interest rates are very low, and that will continue to drive property prices north. The way to approach the market is with the right team around you. So you need a finance broker, you need a buyer's agent that's fully qualified, you need a good solicitor to review the contract, a good pest and building inspector or builder, and you need a tax advisor and an accountant. So without those people, you're going to be going into a process only with half your protection around you. So make sure you've got the right team of advisors, and again, Pete and I can recommend you to those people if you need them. But in terms of location, Pete, where are my sort of 5 areas that I'd look for in Sydney for value? A couple of them, I would say, one is the Sutherland Shire. The Shire, they call it God's country. It's got some beautiful waterways, but that area is incredibly good value. If you've got sort of as a home buyer anywhere from just around $1 million to about 1.2, you can buy within 40 minutes of Sydney Airport and the city, and have a really great lifestyle. So that's an area I think is going to see some significant growth in the next decade. Another one is, second area I'd recommend, is Badgerys Creek Precinct. So Badgerys Creek is one of the biggest infrastructure projects in Australia, Sydney's second airport, and that's going to spin off a lot of potential for price growth in the surrounding areas like Liverpool, Bankstown, Penrith, and there's some individual suburbs around that Badgerys Creek. But that's a whole a session on its own, basically. Third area is the Northern Beaches. Again, been extremely resilient during the COVID crisis, but the upper Northern Beaches has also seen a really strong demand from buyers, both investors and home buyers going forward, because it's such an attractive lifestyle. Great surf breaks if you're a surfer like me, but also just the best of both worlds, being not too far from the city, but far enough away that you've got a great lifestyle. Fourth area is around Blacktown, and again, that's going to get the spin-off from the what's called the metro, the new metro train line that goes up right through out to Rouse Hill, and also some spin-off again from Badgerys Creek. And the final area is the Hills Shire. Again, benefit from the new train line that goes through, and all of the commuting benefits that come through from that. So yeah, there's 5 quick areas, Pete, that I hope some of your viewers might find helpful.
Yeah, thanks, Richard. I'm glad you mentioned the Shire. It's more than 20 years ago now, but did used to live down in Miranda back in the day. And as you mentioned, it's very commutable. Got train connections through Sutherland, even suburbs like Janelli. Great value compared to the eastern suburbs, Lower North Shore and the west. So
exactly.
And a bit more space down in that part of the world, although probably not quite as much as it used to be. It's a bit denser now in some of those markets around Gymea and so on, but yeah, good lifestyle, good beaches, and still very commutable. So some really great insights and tips today. Thanks, Rich. So as I mentioned, if you had any other questions that we didn't get to, just please feel free to shoot me an email, pete.wargent@buyersbuyers.com.au. You can also find out more about our services and the prices and our panel, including Rich, at buyersbuyers.com.au, and we'll also upload a recording of this video. So what we can do is actually send you a copy if you missed any of today's call. So thanks, Rich, for joining, and thanks everybody. And we'll be in touch and look forward to hearing from you in due course. Cheers.
Right. Thank you so much, Peter. Thanks everyone for joining us.
Thanks very much. Cheers.